If you're like many property investors, you've probably had more than your fair share of frustrations over the last couple of years, including the increased cost of maintaining your property with rising interest rates and mortgage costs, rising council rates, insurance, and the ever-changing legislative environment that seems to be favouring tenants more and more. Well, today I'm joined by Leanne Jopson, National Director of Property Management at Metropole, to discuss some of the recent shifts in our rental markets and the changes to our tenancy laws across Australia. So, welcome to another episode of the Michael Yardney podcast, where we help investors gain clarity amongst the confusion of all the mixed messages regarding the property market so they can develop the financial freedom they're looking for through strategic property investment advice and smart money management. Now, there's a lot to keep on top of when assessing the state of our rental markets, so let's get on with the show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Hi Leanne, as National Director of Property Management at Metropole, with your team looking after, I guess, close to $2 billion worth of assets for our clients, you've got a good handle on what's happening in our rental markets. And I think it's fair to say that a lot of investors seem that the scales have tipped quite a bit towards the tenants lately, haven't they?
They absolutely have. And with elections looming, I don't see that really changing anytime soon. That said, we're probably going to see a lot of promises made and headlines created that we probably just need to understand are election promises, and lots of election promises never come to fruition.
Well, it depends who gets into power too, doesn't it? It's going to be an interesting couple of months. Now, if we look back over the last couple of years, rents have skyrocketed, but at the end of 2024, the rate of rental increase started to slow down, and that led to some commentators predicting that was the end of rent rises because of affordability constraints. They can't keep growing at the sort of levels they did, double-digit growth, and I accept that. However, in a strong sign that Australia's rental crisis just refuses to subside, the latest statistics, the vacancy rates for the month of January, have actually come down even lower, and the total number of vacant rental properties fell sharply over the month, 31,822, and that's a significant drop from over 47,000 properties for lease around Australia the month before. So, Leanne, what's really happening with vacancy rates and rentals around Australia?
Funnily enough, statistics are a funny thing, and they don't necessarily, they show a snapshot in time, and we always have the seasonal variations over that Christmas period, and I think that's probably reflected more in the December figures.
Yes.
If we look at January's figures, though, and I believe on Property Update, Dr. Andrew Wilson and yourself have just published some of those figures, we actually saw that the vacancy rates are actually still pretty low. In Sydney for houses, it's about 2%, for units about 2.8%, and then in Melbourne for houses, it's also 2%, about 3.6% for units, but that still saw it drop a little bit. And when I talk about those seasonal things, we do see vacancy rates for units increasing over that December-January period. Normally, in this case, it's actually dropped because of our university and educational facilities. Obviously, they're on holidays over those periods and there's tenancy change there. Brisbane vacancy rates, though, are still very low, houses at 1.7, units at 1.8. So the reality of the situation is that rents are still rising. They're just rising far more slowly than what they did, but they're certainly not reversing.
Sure, and there's no end in sight to this because despite fewer people coming to Australia, our population is still growing much faster than we're building new accommodation. And so I can see that this rental crisis, as some are calling it, is going to continue for some time. But we've already spoken about the government interference just a little bit. We started to talk about that, Leanne. Many investors are keen to keep increasing the rents, well, as much as they can, what the market allows them. But there's now some restrictions on how often you can do this. Isn't that right?
Correct, Michael. Over the past 12 months, there's been several changes in the rules and regulations surrounding rent increases. We did see that sort of massive post-COVID correction, which saw a drastic increase in rents, and now we're seeing that meter out. But to counterbalance that, all governments also brought in a variety of rent restrictions as comes about that. So essentially, the first one, and perhaps the most important one, is that rents can only increase once every 12 months now. In some states, you're able to increase the rent every 6 months, providing that the tenant wasn't under a fixed term tenancy. Now it's once every 12 months. In particular, or of particular note, is what's happened in Queensland, though, where that rent increase is actually now attached to the property. So if you increase the rent in January and the tenant vacates in March, you can't actually put the property back to market at a higher rent. You must stick to the rent that you served in January. So it's actually attached to the property now.
You can see why investors are getting frustrated, thinking, hey, I've lost control.
They do feel like that they've lost control, and rents still can't be increased during a fixed term tenancy unless that rent increase was actually built into the fixed term agreement before it was actually entered into. And I guess the other thing to note, though, is that there is no longer a maximum on the amount that the rent can increase by, but what there actually is the ability for a tenant to object to the rental increase regardless of how small it is. So even if you put up the rent by $1, the tenant could still object to that. There's also some evidentiary requirements, particularly in Victoria, where essentially an owner has to prove that the rent that we're increasing the property to is reflective of the market, not of their increased costs, but of the actual market. If somebody went out to market, this is what that property would achieve. But having said that, we are getting a more formalised process there. So we are slowly, one step at a time, taking back some of that control for our owners when it comes to rental increases.
Well, I know the property managers at Metropole spend a lot of time making sure that our clients maximise their returns and get the best rents, and keeping in touch with what others are achieving. That's not always so easy at the moment, when what you see online isn't necessarily what the rents are. So if you do some research on realestate.com or Domain, asking rents aren't always what's finally achieved, though, are they?
No, they're not. And that's, again, of particular importance in Queensland, where under new legislation, essentially we cannot accept, we had the laws where we couldn't encourage rental bidding, and rental bidding actually became illegal. But now we're actually not allowed to even accept them if made. So if you advertise a property at $600 a week and somebody offers you $610, you must reject that offer. Therefore,
you must reject the offer if somebody wants to pay you rent.
Correct. If it's higher than the advertised asking price, you must reject it. It's illegal to accept a higher offer. And that's the way the Queensland government have got around rental bidding. But what that does mean, and I've often spoken about this before in podcasts with you, Michael, that these rules are not something to be scared by. They're just how we learn to play the game. It's just changing the rules and learning to play the game efficiently or better. And so what that essentially means is now when we're having some of those discussions, we'll go, okay, I think the property is worth $660. Let's actually start it at $670 or $675, knowing that we might have a little bit of negotiation there. Which means, exactly to your point before, that is, whilst you might jump on realestate.com and see properties advertised at $670 or $680, they're probably actually going to be leasing for $660. So again, that market's just going to, or the information out there is just going to skew slightly as we get used to it.
I know one of the reasons people invest in property is because they feel they've got control of their asset. But over the last couple of years, many investors, as I've already mentioned, feel they're losing control. But one particular area that seems to be causing a lot of concern is the changing legislation around ending the lease. I know many landlords feel, hey, the tenant's got the right to vacate at the end of the lease agreement. I can't force them to stay longer. But me as an investor, I own the asset. I've got all the risk, but I've got the same right to take back possession if I want to move in, or if I want to renovate, or I want to sell it. The legislation's moved against owners, hasn't it?
It has. And it's not just the legislation and the extra layers of compliance or evidentiary documentation that as a property manager, therefore as an owner, you need to supply, but it's also the fact that the members, when judging or making a ruling as to whether somebody's got to actually vacate a property, is they're being asked to apply a reasonable and proportionate test. So essentially that means that you can serve a perfectly legal, perfectly evidenced 60 or 90-day notice to vacate because the owner wishes to move in or wishes to renovate, or one of the other numerous reasons that you can give. And yet a member might decide that it's not reasonable or proportionate. That is, that the cost to the tenant vacating is greater than to the owner moving in, or the tenant isn't going to be able to find rent at that same rental, and therefore that's going to put them on the street. So no, we won't allow you to renovate the property because that's going to push the rent up. Now, there are extreme cases, but we are finding that is of concern, and we are seeing rulings that are taking longer. We've had one in Victoria just very recently ourselves, where the lease was actually extended on 2 or 3 occasions, a total of 5 months before we were eventually granted possession of the property. So we are seeing some of those factors come into play, and that's where getting the documentation and being prepared that just because you've served the notice doesn't mean you're going to get possession, and making sure that we're factoring that in when we're making our plans.
Now, the legislation is different in every state. Residential real estate is controlled by state-based legislation, Leanne. And I know some naive beginning investors think, oh, I can collect rents myself. What does a property manager do? I hope that your explanation is showing people that it's a lot more than just collecting rents. It's a lot more than just doing the routine inspections. And there's a lot of responsibility on property managers now to keep up to date with this, Leanne.
Absolutely. We're finding that it's not just the legislation that keeps changing, it's the interpretation of that legislation. And whilst none of the CATs, the Civil and Administration Tribunals, are actually based in precedent, so the same case, different people can have completely different rulings. We are really studying that case law quite closely because that will give us an indication on how to advise our clients and what the likely or most likely outcome is to be, and what evidence or what documentation we might need to show that not having the tenant remain in the property is actually fundamentally detrimental to the owner's plans, needs, family.
Well, at Metropole Property Management, we help serious investors maximise their returns and protect you from the tenants and the ever-changing legislation that's now, as we keep saying, more in the favour of the tenants. I know that vacancy rates are low and it's easy to find tenants, but I also know that at Metropole, our vacancy rates are below industry averages, and finding a tenant isn't really the hard bit. Leanne, I think it's finding a tenant that's going to look after your property, keep paying the rent and be able to pay higher rent over time. That's what we look for. So again, if you're interested in maximising your returns or just understanding, are you getting the rents that you deserve, why not go to metropole.com.au and leave us your details, and we'll have a chat with you to help you understand what's happening here. Vacancy rates are low, but I know that we actually only had a meeting a couple of days ago that at Metropole, they still are well below industry averages.
Yes, I was saying in that earlier piece earlier in today's podcast that those vacancy rates are sitting just below or at 2%. We're actually seeing in most of our offices that our vacancy rates are actually below 1%. I think, Michael, in the other meeting, I was skiting a little bit that we had vacancy rates of 0.48%, so less than a quarter of the vacancy rates that we were seeing in Victoria, and our Brisbane office is very much similar. I think if you jumped online right now, we've got a whole 2 properties advertised for an entire portfolio.
Fantastic. Now, as we just go back to this conversation about ending a lease, clearly things have changed, and so you've got to give the tenant even more notice than you needed to before in some states. What's the value of a fixed term lease? Or do you just then maybe just go month to month to make it easier?
Well, look, there is still value in a fixed term tenancy, in my personal opinion, even if that is just for the tenant, but there's some considerations there that we do need to take into consideration. And perhaps the biggest change in that space is actually around tenant assignment, or what happens if a tenant breaks lease. So tenant assignment is the legal term for break lease. We saw probably 12, 18 months ago, a major change came in, and that change actually started in New South Wales. And that was that instead of the normal pay rent until such times as a tenant is found and then a pro rata reimbursement of the leasing costs, what happened is became a proportional fee. So literally the tenants could walk in, so tenants under a fixed term lease, they could walk into the office, say, "Hi, here are the keys. I'm breaking lease. I'm paid up to date. So I'm paid up until today's date. Here are my keys. And I'm halfway through my tenancy. So I'm going to pay you 2 weeks rent and my tenancy is at an end." So the legislation became, in the first 25%, so the first 3 months, they paid a 4-week penalty. Second, 3 months. Last 6 months, 2 weeks. Last week, 1 week. So it was a sliding scale, but they do not have to give notice. Now, Queensland have actually taken that a little bit further. So they've employed the same ruling as Sydney. So it's a proportionate 4, 3, 2, 1 week penalty. Or the rent from the time they vacate until the time that a new tenant is found, whichever is the least of those two amounts. So if you have a tenant that breaks their lease and they would normally pay a 2-week penalty, but you have a great agent who finds you a new tenant in a week, then that tenant will only have to pay you a week worth of a tenancy. So it gives no further consideration to notice periods, or gives no consideration to the costs that an owner incurred in placing that tenant in the first place, nor the costs that they're going to incur for placing a new tenant, which is a really big consideration to make when you consider that if a tenant goes to from a fixed term to a periodic tenancy, they actually have to give the notice, in Victoria 28 days, in New South Wales 21 days, and in Queensland 14 days notice of their intention to vacate. And if they don't give that notice, they have to pay rent for that period of time. So there are actual benefits for allowing a tenant to go on to a periodic tenancy. And in fact, we don't really have that choice anymore. At the end of a fixed term tenancy, the tenant can choose to go to a periodic lease. We can't enforce them signing a new fixed term.
Now, Leanne, we all see those stories on the Current Affair about slum landlords not looking after their properties. I know most investors are reasonable, they are responsible. However, I also know that the minimum standards required for rental properties has changed, has increased, and some property investors are struggling to meet those because it's quite expensive for them to upgrade their properties. What's going on?
Very true. And perhaps the best way is maybe we could pop some links in that show the current minimum standards for each of the states, because they do vary a little bit as they go through. But I guess the other thing is, really, most of our Victorian and Queensland landlords will have been through that. Our New South Wales landlords are a little lucky at the moment, I think, because their housing crisis has been deeper and longer. They haven't got as many to contend with at the moment. But I think what we need to look at in terms of our clients' planning for the next 12 months and what might happen there is really the 5 key areas that are in the proposed legislation in the 3 states in terms of what changes might actually happen. Lots of those, if I may, lots of those actually surround energy efficiency. Perhaps, Michael, what we should be looking at is the areas that have been flagged for consideration over the next 12 months. And we do know that there is proposed legislation out there at the moment, albeit at the confidential stages and not for publication. But perhaps if we could touch on the 4 or 5 points there that are key.
Sure.
So we know what to plan for. Again, though, don't rush out and make changes straight away. This legislation is yet to pass. It's just in those draft stages at the moment. So I guess probably the biggest one that we're hearing a lot about is that cooling may be introduced as a minimum standard. So we've had and heard a lot about heating being introduced. And in fact, those standards came in already in Victoria. We're now looking at potentially cooling standards. So as a minimum requirement, the property must have heating in the main living area and some degree of cooling. We don't know the criteria there yet, but that is an introduction, especially as temperatures rise. And we've all just been through a scorching summer. So I think we can understand that that's becoming more and more necessary, I guess, as we come to renting out our properties. The other area in which the government's looking to place regulations is in regard to energy efficiency. So they're looking at introducing regulations around insulation, draft proofing, hot water service systems, running at off-peak times and having those kinds of flexibility so we're not heating water unnecessarily, and of course heating and cooling. Now, some people could say, that's not a good thing and it's going to increase costs immediately to owners. And it will. There's also, and there's no denying that, and as an owner, I know it's going to cost me on occasion, but I also see a benefit to it because we're also seeing, and the prediction, as you said, towards the last year is that we had reached the affordability caps, so rents couldn't keep going up. And part of the reason for that is that because tenants were paying so much all of us were paying so much in electricity and gas and those kinds of things. So I can see if we make our rental accommodation more energy efficient, that means that our tenants are paying less money there, and that may actually give us the opportunity to increase rents and still stay within that affordability spectrum that we're really looking at.
That's an interesting perspective. But some of these requirements seem to be excessive. I know that in some of my properties where they're really nice kitchens that were modernised 10, 15 years ago, all of a sudden the legislation says, hey, the height between the cooktop and the top the cupboard above the bench isn't big enough. You've actually got to change things. That's a major change when it doesn't seem to be annoying anybody.
There's been a few instances like that. No, I'm happy to report that we have had some breakthroughs on that, as in the timeframes and the fines and those kinds of things, whereby we're being given greater leniencies there if it's considered not to be an item of urgent maintenance nature. So
Now, you mentioned the word fine, Leanne. So there are fines both on the landlord and on the property managers. Is that right?
That's correct. So penalty units have finally been applied. And this is in Victoria, although we also know that there's rental task force that are being introduced or have been introduced in both New South Wales and Victoria, where they're literally seeking out properties that are not compliant. And there's penalty units and fines, appropriate fines, if you're found to be non-compliant in those areas. But we are being given leniencies in those kinds of areas with the benchtop space, where you're not going to get leniencies if you've got a gas leak or those kinds of things that are considered to be urgent. So there's still, thankfully, a little bit of a common sense approach being taken there.
Well, that's good to hear.
Exactly. I will just say there's one other change that is coming in New South Wales and is also slated to come into Victoria that I'm very much in agreement with, and we've actually been rolling that out in all of our developments, Michael, for a number of years now, and that is making it mandatory for the blind cords to be wall mounted at a safe distance.
Good.
Yes, for those people listening to the podcast that may not be aware, it's truly tragic that we have so many young children either unfortunately lose their life or suffer really serious injuries from choking and strangulation hazards when those blind cords drop so low. So that is a minimum safety standard that I'm actually really pleased that we're already rolling out. I'm really pleased that it's going to be made mandatory across the states.
So it's really important for investors to have the property manager, the type of property manager, A, who's up to date with this, and B, who does very detailed inspections on a regular basis, especially since the legislation keeps changing. Now, I know at Metropole a number of years ago, you introduced something different, special, where it was actually the property managers in the old days used to take photos. Now you can actually, using a 360 camera, clients can actually walk through their property and go from room to room and look up and look down and look sideways and see all the things that are going on. So that's changed. People are saying AI is going to change the world and it's going to change how we look after properties. But I still see the importance a property manager who has to deal with the tenant on the one hand, the landlord on the other, legislation in the middle, and actually understand the emotions and be a manager of people, not just a manager of properties, Leanne?
Absolutely. And I guess that comes from, I guess there's two elements to it. It's also that AI it's doing some great stuff and we're using it. I'm not going to lie when we want non-emotional responses. Like, can AI compare the condition of the carpet in this photo to the condition of the carpet in this photo? And it can give you some really great technical descriptions and unemotive responses as you go through. So there's certain benefits to it, absolutely. But what AI can't do is build a relationship with a tenant that might allow you to, communicate with the tenant in such a way that we need them to cooperate, and if they could do this for us, we could do this for them, and make those arrangements that ultimately lead to the longer tenancies, tenants more willing to pay higher rents, and reducing that vacancy rate and not seeking compensation as tenants are allowed to now from the moment it's reported. That little bit more of give and take, because you've actually got a relationship with the person you're working with.
So for those of you watching this or listening to my discussion with Leanne Jopson, I hope you recognise that property management is a serious business. Now, I know many property investors wonder, should I even be paying the property manager? Why should I be paying that much? Believing, as I said before, all they do is collect rents or occasionally inspect the property. But I hope you can see how complicated the business of property management has now become. And not complying with the legislation can be very expensive for you as a property investor, and as we've already said, the property manager can get fined as well. So at Metropole Property Management, we help serious investors maximise their returns and protect you from the tenants and from the ever-changing legislation that's now, as we keep finding out, more and more against you in favour of the tenants. And so on that basis, if you're wanting to use the same property manager that helps look after my properties, but also looks after thousands of other investors, we've got our own on-the-ground specialist teams. Go to metropole.com.au and have a look at the property management tab, or just leave your details and we'll be in contact with you to see, are you getting the right rent? How can you maximise your rent? What else can you do? What are you not doing right? Leanne, there's one last question I'd like to ask you about, and it seems to be something that crops up occasionally, confusion about who pays for water usage. Could you please explain this?
Absolutely. And in actual fact, we've got some changes there in that space. So great question, Michael. Okay, so water usage for a very long time across all three states could only be charged, first of all, if the property was separately metered. So essentially that means that we could accurately measure that the person living in that property used X kilolitres of water. It couldn't be there's 20 people living here, divide by 20 to get that. So to make sure that the person that we're charging was the person that was using. That was fairly stock standard as we went through. We have seen, and Queensland have led the way for this for a number of years now, and that is the additional requirement for a property to meet water efficiency standards. So in Queensland, not only must the property be separately metered, it also must meet some minimum water efficiency restrictions, and the water efficiency certificate must be issued. So you must be certified that your property is water efficient, and then you can on-charge the water usage. In Sydney or in New South Wales, we had a similar rule, but now there is a requirement for water efficiency to be certified. And in fact, that kicks in as at the 23rd of March, so only sort of 6 weeks or so away. And that means that we do need to get the properties that are on charging water to complete a water efficiency certificate. Our clients at Metropole will be receiving some information about that shortly. But once the certificate is issued, and more importantly, there's two things that we perhaps need to be mindful of with the water efficiency that has now been stipulated in New South Wales. And that is, first, that our showers must have a flow rate of not more than 9 litres, and that our toilets must now have a 3-star efficiency rating for flushing the toilets. Sounds very technical again, but it's all about that water usage and restrictions. In Victoria at the moment, the dual flush and the operational dual flush has been in place with the minimum standards already. The minimum standards is looking to increase. In fact, it is in the proposed legislation that we're also going to have some flow rate restrictions in there for shower heads. So we will see water efficiency become a little bit of a topic, I dare say, over the next couple of months as we head to elections.
So there are continual changes, hassles, challenges, but I think it's important for investors to remember that property investment is a business. And if you had a retail shop, you'd have to change with the fashions, you'd have to compete with other people, you'd have to stick to the legislation that keeps changing as well. So this is just the cost of doing business. And it's important for people to recognize that it's often too hard to do on your own and you need a good team of people around you. Once you've bought your investment, the next step is to actually make sure you maximize your long-term returns by getting the sort of tenant that's not going to be able to give you, it's not going to give you too many problems, but it's going to be able to keep it, being able to afford to pay higher rents in due course. And you're just going to have to maintain your properties in good standard. Just like if you had a shop, you would keep changing the shop front or the stock that you're carrying to make it work. And if you treat it as a business and remembering that while it may affect your cash flow, these things are tax deductible anyway. And remember the big picture, why you invested. You invested to build an asset base to, in the future, give you the financial freedom you're looking for. And clearly property values are still increasing around Australia and are going to continue as over this year interest rates start to fall and the market moves to the next phase of the cycle. So Leanne, thank you for updating us with this. And while it's not news that people want to necessarily hear, it's news they must understand and must hear. And if you're a beginning property investor or considering getting in the market, please don't let these sort of things scare you off, because we've seen the great results that building a substantial property portfolio has created for clients, haven't we?
We have indeed. And I guess, as I said earlier, the changes in rules about notices and evidentiary requirements, as I said, that's just about learning to play the game by a new set of rules. In regard to the minimum standards, I do understand that they're initially costly, but all of them actually improve the value of the property itself. And as investors, that's what we want. We want to see the return in terms of equity increasing, and putting in air conditioning or heating only increases the value of your property.
Yes, it does. And again, if you set yourself up correctly, you should have financial buffers in place to see you through. So at Metropole, when we put a strategic plan together for you, what we do is not just help you buy a property, but help you buy time by having financial buffers in place. Leanne, thank you for that. And I know you're going to be part of the faculty at Wealth Retreat on the Gold Coast from the 3rd to the 7th of May. Once a year, we get together with about 80 successful property investors, business people and entrepreneurs to help them get to the next level. Yeah, and only maybe an hour ago, before we started pressing record on this, I was speaking to somebody who's got 7 investment properties, but he's looked back and he's realised that he's got them in the wrong ownership structures, he's bought them in the wrong spot. He was accumulating properties and boy, he's done well. He's done better than most investors, but he didn't know how to do it right. And I pointed out to him that he actually needs the sort of information that the average investor doesn't get, that you can't get from the internet, you can't get from podcasts or blogs. In fact, that's why I started Wealth Retreat way back in 2005, 2006, to give people the information that they need to get to the next level, to give them a community of people who others, like-minded people. I found that isolation is a big issue with a lot of investors, not having people to talk with, having the right knowledge to take advantage of the next stage of the cycle. And the theme of Wealth Retreat is, where are you going to be in 5 years' time? Where are you going to be in May 2030? That's scary, Leanne. 2030 is 5 years away. And so it's a holistic approach. Sure, we talk a lot about property and tax and finance and development, and you're going to be helping people to understand about property in management. But really the aim is to holistically build the next stage of your life. In other words, you come in with lots of ideas and you go out with firm plans, and everyone who comes to Wealth Retreat has a one-on-one implementation chat with me afterwards. But it's not just what you learn from the faculty, it's who you have breakfast, lunch and dinner with and learn as well. So if you're interested, you've got the emails from me over time also. Just go to wealthretreat.com.au, register your interest. We'll have a chat with you to make sure that it's right for you. And if it is, I'll take the risk and offer you a money-back guarantee. Happy to do that because no one's ever asked for it before. It's always a great time, isn't it, Leanne?
It is, and I thoroughly enjoy it. As everybody knows, I love talking about property management. But by the end of that 5 days, Michael, I'm almost hoarse though, because it's not just property management or not just investment. It's so much of that community that you talk about and being able to share experiences and work solutions together.
Fantastic. Okay, so thanks for giving us all this great knowledge, Leanne.
Thank you, Michael.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to talk to you about the power of a useful belief, which in my mind is a better approach than the stories about positive thinking. Look, many years ago, I learned a concept that completely changed the way I face challenges. Like everyone, I get more than my share of challenges in life. And it came from motivational speaker Chris Helder in his book, Useful Belief, that I've actually got on the bookshelf behind me there. At first, it seemed like just another take on positive thinking, but it was really much, much more than that. It actually turned the whole notion of positivity on its head. You see, we're often told just stay positive when things go wrong. But the reality is, when you're truly facing a tough situation, a setback, a loss, or just feeling stuck, the last thing you want somebody to say is a cliche about positivity. Sometimes it feels like forcing yourself to be positive is not only unhelpful, but downright exhausting. And that's where Chris Helder's idea of a useful belief comes in. Instead of trying to convince yourself to be positive, which can feel hollow in difficult moments, Chris Helder suggested adopting the mindset that's practical and grounded. It's about finding what's useful in any given situation, even if it's not great. So here's how it works. When life throws you a curveball, don't waste energy trying to paint it as something positive. It's clearly not. Instead, ask yourself, what's the most useful belief I can have about this situation? What perspective will help me move forward rather than get stuck in frustration or negativity? For example, if you're facing a financial setback, instead of forcing yourself to feel good about it, you can shift to the useful belief, hey, this is a chance for me to reassess my finances and strengthen my strategy for the future. It's not about pretending everything is rosy. It's about finding the mindset that will help take a more productive action. Learning this approach shifted how I solve problems. Instead of dwelling on the unfairness or the frustration of a situation, now I ask myself, what belief can I adopt that will actually serve me in this moment? It's a strategy that's allowed me to dig myself out of tough spots and make progress, even when circumstances weren't ideal. So next time you're faced with a challenge, why not try it out? Don't force positivity if it's not genuine. Instead, find a belief that's most useful to you. It's a subtle change, but it's one that can change everything. Because while we can't always control what happens to us, we can control how we choose to respond. And sometimes that makes all the difference. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen-to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. Oh, and I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcasts, there are 3 little buttons at the top of the player. Or just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?